Sovereigns, great to see all of us here again. We're now in August. Today, if you can go to the next slide, please. Yeah, so as I mentioned, we'll be talking about SIP 66, about the trading challenge. Can you go into the next slide? Next slide. All right, so we had SIP 66 on Thursday and Friday, and this was, I think, the most controversial SIP that we've had so far. And even though it was just a SIP about a parameter, and what we anticipate is a temporary change. In other words, what we were trying to do is pause new originations for a period of time. It was a very special SIP because in the SIP, we were asking Bitocracy to make a choice between long-term benefit and short-term benefit. The Zero Protocol and its originations in particular, origination fees have been the leading source of revenue for the past months for Sovryn. And so pausing originations means pausing the most significant piece of our revenue. Now, I published a longer video, which you can find in the Sovryn YouTube or on my Twitter, discussing why I think this was a very important vote. But I would like to look at it from two perspectives. One, because the vote was a question of long-term versus short-term, it was a painful vote. It was also a vote to pause what has been our primary product. And so it was painful in two ways, and therefore not surprising that it was a controversial vote. And I'll come to that part in a second. But also, because it was controversial, it illuminated in a way that we haven't yet had really opportunity to test the distribution of voting and the behavior of voting in Bitocracy. So, systems truly reveal themselves when they're challenged. And I think this was a challenge that Bitocracy took and stood up well for. So let's start with a high level. 74% of voting power voted in favor of the SIP. So even though it was highly controversial, it remained the decision ultimately was one of high consensus. And in fact, the reason it was close is because to pass, this SIP would have required a 70% quorum, a 70% vote. We also saw a very high level of participation. In the Twitter thread, I posted a link to the first study of its kind, which looked at the average participation rate of DAOs, significant DAOs across the crypto sphere. And participation rates in terms of voting power and also in terms of addresses tends to be sub 2%. We saw 33% participation in terms of voting power, and a smaller percentage, but still not insignificant percentage, in terms of number of addresses participating. Another important fact was that one of the claims that detractors will sometimes make is that Sovryn is... Sorry, Inglandia, why do you keep doing that? If you could just keep it on the slideshow, please. So another point that detractors will sometimes make is that DAOs in general, and they will include Sovryn in this, is controlled by a small number of whales. Now, because of the large number of participation, that isn't the case with Sovryn. And we have two really interesting metrics here. One is that the difference, the 74% in favor, was not primarily due to the size of votes, but rather the number of votes on each side. Because voting in favor of the resolution was an average voting power of 400,000. And voting against was a very, very similar, only slightly smaller voting power of 340. So there wasn't whales on one side and others, or minnows on the other side. It was split quite evenly. But also, CK has been producing an analysis of voting distribution in Bitocracy for a while now, and this really came to light in particular this time. If we look at voluntary stakers, it's about 61% of voting power. Investors over the various rounds, about 16.7%, and the team around 22%. So, now, obviously, this is not easy to analyze, and there's some mixing. Some of the team will have voluntary staking. Some of the investors potentially have voluntary staking. But overall, what we're seeing is a clear trend towards a broader distribution of voting power. And already we can see that there isn't any dominant particular block. And the final interesting part is that if you look at core team votes voted both for and against this particular SIP, which is another interesting indication that we don't have for example, core team voting as a block. So in terms of looking at the way power is distributed by Bitocracy, I think this is a really great demonstration of how Bitocracy, in many ways, I think is better, right? I think over accomplishes the goal of distributing governance in comparison to where it could be, and certainly in comparison to where many other DAO projects are. If we can go on to the next slide. I think the other big thing that I mentioned is the question of, will Bitocracy work as designed, right? So we wanted Bitocracy, and we want Bitocracy to be able to provide protection against governance attacks and to provide alignment to the long-term benefit of Sovryn users, and of course SOV stakers. And in order to do this, the way that Bitocracy works is unique. To the best of my knowledge, there is no other DAO system in the world that does this, which is, it is forward-looking rather than backwards-looking. So most DAOs just use a simple one token, one vote system. And some have a slightly more sophisticated system where the longer you've been staking for, the more voting power you accrue, which is backwards looking and tends to advantage sort of people who are in early. In this respect, Bitocracy is very different. It's not proof of stake, it's proof of staked time, so or what I call post, and is very different because it's more similar to mining. You constantly need to re-up and re-engage. And so over time, and this is represented by the orange graph, your voting power will decrease unless you restake. And the longer you stake for into the future, the more voting power and, as a result, rewards you will earn. And in this particular case, I think we have a really strong example of this working, where overwhelmingly SOV stakers voted in favor of taking short-term pain with a view to long-term security of the position of the line of credit positions, the reputation of Zero, the reputation of the sovereign dollar, and overall health of the sovereign ecosystem. And so I think that's something we should be shouting from the rooftops, right? We've built something really remarkable in terms of Bitocracy and a unique governance system, which when challenged works as we expected it. I'd like to go to the next slide now, please. Now, part of what is happening here in terms of the controversy was also the fact that we have now been in a bear market for a long time. Sovryn effectively launched at the very peak of the bull market of last cycle's bull, and so most of the experience that Sovryn users and SOV stakers have had is decline. We've seen declining volumes, we've seen declining prices in Bitcoin, in crypto, and in Sovryn. It is easy to allow this to become an overwhelming feeling, but it would be a mistake. I think the fact that we are living through this decline, continuing to very slowly but edge our way towards growth during this period, continuously building and improving during this period, and effectively from an emotional and community and cultural perspective, sort of building ourselves up with the traumatic experience of having most of the project's lifetime be in a period of decline is going to provide us with a great deal of power. We're currently in what I would call spring season, which is the planting season, the season in which we're planting the seeds for the future growth, which we will be able to harvest in summer and autumn. The bull part of the cycle. During this period of time, we've been very clear on this. Our primary goal is survival, and after survival, it is kicking the tires, dealing with technical debt, and building. And particularly in planting season, in spring season, it is building those things which are going to set us up for the next step. And that means the new adapt. It means integrations with third parties. It means strengthening the features and building out our feature set. And so we should expect setbacks during this period of time. We should expect low growth during this period of time. And our primary focus needs to be around proving that even during this period of time, we can continue to build and grow. And I think the fact that we have been able to do that is a very, very strong signal for confidence in what is to come. And so that brings me to the next slide, which is our big picture, right? So we've been speaking of having 3 stages to the project. Stage 1 is building out the Bitcoin native DeFi ecosystem and building out the tooling, the products that will work and grow, and the sort of hardcore initial community around that. Then stage 2 is leveraging that to build trustless Bitcoin rollups, to build sovereign rollups, and ultimately a trustless peg, port over the utility that we've built to create the hardcore of an ecosystem and grow that ecosystem, which would bring us into stage 3, which is building a world on Bitcoin, allowing us to build a Bitcoin native economy, Bitcoin native governance systems, Bitcoin native communities, Bitcoin native nations, and all the rest. None of these ends cleanly, right? Stage 1 will continue forever. Stage 2 will continue forever. There's going to be constant building and growth. And also, these stages are backwards looking. So having a roll-up system would allow us to have more of an ecosystem and a more sovereign ecosystem, which would make it easier for us to attract users and developers. Building the world on Bitcoin and having a strong economy would generate more use for all of the systems that they would be building. And of course, these would drive use of things like Zero, the sovereign dollar, our trading mechanisms, etc. And so both forwards and backwards in time, these things are part of the same plan and grow, they reinforce each other and grow. So where are we in this? Well, in terms of building a Bitcoin DeFi ecosystem, we've done a remarkable job. In comparison to any other project that has attempted this. We are by far the largest Bitcoin ecosystem across effectively any metric. Transactions, trade volumes, TVL, larger than the entire ecosystem of stacks. Built by, a hardcore, relatively small team with a relatively unique set of users and community, and within less time and less funding than many other projects. But we haven't yet achieved a breakout success in terms of having a DeFi ecosystem which can rival the largest DeFi ecosystems in, for example, Ethereum or Polygon. And so to get there, we still exist in a relatively isolated environment. So one of the things that you've been seeing and we will continue to work on together is greater accessibility, building bridges to other economies, building more ways for users to gain access. So we've been working hard to get more bridges. Some of you may have seen that we have more of our assets being listed in things like DeFi Llama, CoinMarketCap, CoinGecko, integration with Dune Analytics, integration with more wallets like Exodus and Frontier, and deepening the integration and building real partnerships with them. All of these things, and then things like adding additional exchanges, will provide greater accessibility for many more users and allow us to substantially increase the ecosystem that we're building, as well as allow us to export things like the sovereign dollar, creating more demand for it. One of the other things that we'll be talking about more in the future, I suspect, is the new Bitcoin token economy that is emerging. Started with ordinals, then BRC20s. Soon, I think we'll see many more standards like Taproot Assets or Taro, RGB, ZK coins emerge, and each of these is likely to have its own hype cycle. I think we can be positioning and should be positioning Sovryn to be the DeFi, the central DeFi platform for this ecosystem, which could get very large very quickly, as well as look to push sovereign dollar to be the native Bitcoin-backed stablecoin for this world. And at the same time, design architecture work on Bitcoin rollups is progressing, and I think may come out over the coming months out of the research phase. So this is the work that we're doing in the planting season. It's significant, it's substantial, but we won't see it bearing fruit immediately. It will bear fruit when harvest season comes around. And that brings me to the next slide, which is, again, we're doing more experimenting and more work. We have a pilot campaign, which we currently call the Trading Challenge, which is effectively a pilot limited only to SOV stakers for now, but is a pilot for a much larger, more significant rewards and trading campaign we want to run, first with Exodus and then potentially with other partners, to bring their users to Sovryn and have a significant outlay of capital and excitement and FOMO around the opportunities in Sovryn. So here, over the course of a week, we'll be giving out 3,700 sovereign dollar worth of prizes. Every day there'll be a first place prize of $200, a second place prize of $100, 5 runner-ups of $25, and an additional random winner of $100. So 56 prizes in total, with a max participation of 50 participants. So particularly good odds for the participants. And I bring this up, and we're pushing this hard because we want to learn as much as possible from this so that we can make it as successful as possible when we start deploying more significant capital with more partners. So French Victor will be talking more about that, but I'd like everyone to sign up, because in doing so, you'll help Sovryn and be able to make money doing so. And with that, I hand it back to you, Inglandia. Actually, one last thing. Because the trading challenge is important to us, and also more importantly, because questions around the planting season, the bear market, and SIP 66 are on a lot of people's minds right now. I actually want to encourage you guys to ask questions and join in the conversation here or in the forums. And also, if anyone wants to ask any questions or make any comments now, including disagreeing with anything that I've said, we can take a few seconds to give anyone an opportunity to do that. And with that, back to you, Inglandia.
All right. Thanks a lot, Idan. Do we have any questions for him before we move on? Sorry, I have to get out of full screen to unmute myself. But do we have any questions before we continue? Has anyone here signed up for the trading challenge? Okay. With that, I'll just move on to development.
I had a question for Yago about the second slide on the vote distribution. Can you explain the differences between those categories? and it and a follow-up question is, I see there's team investors investing. Where are non-vesting stakers accounted for?
I mean, not that I would know for sure, but I thought that it's probably a mistake and that what says vesting here should actually be voluntary, but I'm not sure because...
Correct. It should be non-vesting. I made a mistake there. I have to say I'm not 100% sure. So I don't think this 100% represents like what has been allocated to team members or investors or whatever. But the 61.2% is voluntarily staked, or staked via rewards. But I would point out that those who have received rewards is a very, very small sliver of that. I think about 2%. And then team would be those under team vesting, and investors is under the investor 4-year vesting.
Okay, thanks for clarifying that.
Sure.
Okay, any other questions before we move on with updates from Aurora? Going once, going twice. All right, I'm gonna hand it over to you, Aurora, and just get to the right slides. Give me 1 second.
Thanks. I think you can directly go to the next slide. Right. So, since we talked the last time, we had a few releases, like always. And this is not correct. These are not the correct slides. Or at least, oh, I think I know what happened. I think someone extended my points, and that's why I was confused for a second. All right, Lloyd, did you add the first point, the SIP 0066 implementation?
I did.
You did. Could you remind me what SIP 66 was about?
This was the increase of the origination fee.
All right. Okay, good. So we already talked about that, and I do not need to speak further about it. Then we introduced the first of the fee sharing efficiency improvements. And this was increasing the interval between checkpoints from at minimum 1 day to at minimum 2 days. And this has the effect that there are just only half as many checkpoints written, and therefore it's also considerably cheaper to claim the fees if you're claiming them for a larger time period. There are more fee sharing efficiency updates coming, which will be also part of the next section. We just, this week on Tuesday, we updated FastBTC. The FastBTC update was a rather big one. It introduced a few different things. The biggest one is the reclaiming feature. The reclaiming feature allows users to reclaim their RBTC if it does not get processed. So there are different states for the transfers on the smart contracts, and as long as it's not yet on the way over the bridge, users can still reclaim it if it should get stuck for whichever reason, because there's outages with the FastBTC federators or liquidity issues. Whatever the reason for this feature, users can just reclaim their RBTC and try to off-ramp them through another path. For now, this feature is only available on the smart contract side, though. There is no front end for this yet, but it's expected to follow in the future. There are then also some nice improvements which do not have a direct effect on the user, I'd say, but which make things safer for us. And that's that we are storing the configuration for the FastBTC federators now on-chain, which means that if FastBTC needs a config change, like an update of the limits, we can do that. We do that on the smart contract side, then the federators will pick it up automatically, and there's less need for coordination between the federators and not the risk that we have a part of this network running with an outdated config and coming to mismatches. And apart from that, we improved the update procedures if we should need to update to another contract in the future. On the web app, we also introduced a few changes. So Sovryn app now allows user to select hardware wallets at any index. We added defined a supported wallet to the onboarding library and enhanced the convert smart router. The smart router allows to pick the smartest way to exchange the tokens, and it was extended with the path to convert Sovryn dollar to Bitcoin via money on chain. And then there were other bug fixes on the legacy dApp. Can you move on to the next screen, please? Thank you. So I already mentioned it before that there is a part 2 of the fee share claiming efficiency improvements. And this is a refactoring of the RBTC claiming, which allows us to just process more checkpoints at the same time, therefore lowers the amount of transactions which are necessary for doing so, and a button to withdraw all of the fee assets earned with a single button. So currently you need to claim all of the assets separately, and with that button it will be possible to just click one button, claim fees, and you withdraw as much as possible in a single transaction of different assets. What was we expected to already ship this week but got a bit delayed is the Builder portal, but it is about to go out very, very soon, like the first version of the Builder portal, which contains already a very vast documentation. It's not yet completely complete, so there are still parts of the system which will be added over time, but this is already a very good point to start when start building on Sovryn. And on the Sovryn app, we expect to finish the lending migration as well as the migration of the staking and staking rewards pages. Can you move on to the next slide, please? And then there's more work in progress. On the Sovryn app side, that's the migration of the borrowing pages and the voting pages. And then there's all of the projects related to Bitocracy 3.0, which is a transfer of all of the contracts to Bitocracy. And this still needs a few things to be finished before. That's the scripts we need for the different actions. There's the new multi-sigs which are being introduced. There's the additional security review which we're doing for the staking contract. This is almost complete now. We wrote a complete new test suite for fuzzy testing and haven't found any additional security concerns. And we're just taking the time to doing this properly and are now about to finish this. And are also working on a more granular access management for pausing and administration of the contracts so that, for example, we do not need to have the high quorum governance proposals for smaller admin changes, and to make sure that we can pause the parts of the system which need to be pausable at any time without a SIP. And then there's some research going on regarding the possibility to bridge in and out Bitcoin tokens on any forum. And I'm not going to say too much about that yet because it's still in a early research state, but we'll keep you posted how that goes as well. And that's it from my department. Thanks, Ingemar.
Any questions for Aurora? I actually have one. So is this Bitcoin token research all done internally, or is it in collaboration with other teams
It's done internally.
Okay. Any other questions before we
Collaboration, but there's a dedicated effort within the core team. I have a question. One of the most asked for currently user requests is the series of fixes that we're introducing for gas efficiency around staking and rewards. What is your expected roadmap around the completion of this process?
The gas improvements now for the claiming of the fee shares. We have the last story on the Solidity side scheduled for this sprint, which is ending next week, and then there is a story for the front end update the sprint following, which means that we should have it in about 3 weeks' time.
Thank you.
But that being said, that would be the complete update. We should be able to. No, it's better to wait for the complete update. Some of the functions could be updated separately on the smart contract to already give some of the improvements, but I think it doesn't make much sense in this case. About 3 weeks' time.
All right, appreciate it, Aurora. Let's move on with adoption update with French Victory. So welcome to the stage, French Victory.
Thank you, Englandia. Thank you very, very much. I would like to talk today about the trading challenge. The registration for which opened this week on Monday, and there are 3 more days to register. And this game is open for SOV stakers only. So if you're a SOV staker and you haven't registered, it would be great if you could do so now. Today, I'm going to post right now, real quick, the link on the chat for this voice chat, on the text chat for this voice chat. So if you haven't registered, please do so, because we plan to learn a lot from this pilot in order to launch a much larger scale game with a partner that will hopefully see a significant influx of new users coming into Sovryn. This pilot is a promo game for a promotion for these new users. These people, we expect them to be less, let's say, versed in crypto and Bitcoin than our current user base. And that's why we're going for a much more populist type of promotion in order to lure them in and hope that some of them would learn something about self-sovereignty and would like to stay, as they would appreciate the use in Sovryn. Next slide, please. And like I said, if you are a staker and you haven't registered, please register. And if you're not a staker, please stake as little as $1 worth of SOV, or I think even 1 SOV. As long as your wallet is listed as a staking wallet, you're eligible to register and be considered. There are 50 seats available, and the way you move up the list is similar to what we did with Zero. So we'd like to invite friends to join our Discord, and the wallets that have invited more people into our Discords would get bumped up the list. Yeah, there are 50 spots, 56 prizes. It's hard to lose in this game. You're very, very, very likely to win, definitely more than the gas fees that you paid, right? So all in all, this is like a way to reward our SOV stakers, our community, and to learn something that will advance the protocol in the near future with new partners. Next slide, please. I'll go a little bit about the mechanics of the game. So every day there will be a new category getting awarded, and the way we'll do it, we'll roll a dice. We'll upload a video of Yago once a day rolling a dice, choosing, and the result in the die would indicate which category is the category of the day. For example, if the result in the die is 1, then the swap with most value would get the first prize of $200, and the swap with the second most value would get the second prize of $100, and then the 5 runners up below that would get $25 each, and a random winner would get $100. That's every day, just for a random swap. So any swap can win, and the more swaps you do, the higher your odds are to win. Now you might be thinking, well, what if I do a swap of $10,000, right? And then then I like regain the money immediately. Another swap of $10,000. Is it considered like to be the most value in a single swap, even though I sort of cancel it out? And the answer is yes. So if the number of the dice is 5, most value traded in a single day, these two swaps will be considered together for $20,000. Truly, register. It's money for free, almost for free. I'll be happy to take any questions about the mechanics or anything about the game that anyone here might have now.
Maybe you can talk about also plans for future trading challenges or competitions or things like this, and also point out that people who participate in this on an active basis will get automatic access into the next ones.
Yeah, that's a good point. So in the future promos, anyone who participated or registered in this would get immediately eligible. And about the future challenges, like the full-scale iterations of this game, we intend to run it with the Exodus. Assuming this pilot is successful and we learned enough, we intend to run it with Exodus. That's a wallet we've mentioned before, with a 4 million user base. A good percentage of them is interested in DeFi and goes to the Web3 section in the Exodus wallet, either via the app or the browser, the Chrome plugin. And that's a big opportunity for us to get many more users than we currently have using our system. They might not be high rollers, right? They might not be big investors in any coin, but just the sheer number of them would create an influx of transactions and TVL, and would be a very significant boost to the platform. So this pilot is a first step in what we hope to be a move that will capture many users.
I'd like to add to that. One of the things that we've managed to do is we've negotiated with IOV Labs to partner around this, and I think it's really the first significant partnership we're seeing with IOV Labs making a significant cash investment. The implication of that is that this is not impacting our runway or our funds. So these are not exchequer treasury funds that are being spent, but rather funds that have been donated by IOV Labs. So first of all, that's really great news, and a big thank you to IOV Labs on this. And also, we expect to ramp up the size of rewards to potentially tens of thousands of dollars a month. So this could become a very significant and ongoing campaign. Finally, if you guys have ideas for types of competitions that we can run or cool things that we could do, that would be awesome. And also any feedback you can give on how how it works, how you experience it, and also on how you're hearing about it and promoting it, and any questions that you have will be super useful to us, because we need to be able to explain this also to a user base who are not deeply familiar, like you guys are with Sovryn. So any questions you have, you can be doubly sure that they will have. And finally, on that note, I encourage all of you now to go to sovryn.com/trading-challenge and register.
Thanks, Jago. Next slide, please. So there is interest in the pilot. We're getting decent exposures for us. Usually our good tweets are perform around 3,000 exposures. Here we're seeing now it's more than 8,000 on the announcement tweet, and then others are 4, 5, 6, and more. So all in all, it's already providing a boost on social. Sorry about the background noise.
Glenda, it looks like it's back to you.
Is that all? Okay. All right. Thanks a lot, French Victory. So that's basically it for updates. Do we have any final any questions we have about 10 minutes left. Would love to hear some of your guys' thoughts and comments on the trading challenge that we have, or any of the prior updates that Yago and Aurora gave for this call. So the floor is open. You are free to just jump in and speak your mind.
Hi, this is Ben here. Can you hear me?
Yes, Ben.
Hi. Great work to the team. I just have a few comments, some general questions. First of all, how closely is the management team following the price of Sovryn? It's not unexpected that it would go down as the SIP 66 was put in place, and revenues potentially go down, and the platform is effectively locked down for a period of time. But how concerning is that the team? How does it impact their own compensation? Could you comment around that?
Well, I can speak for myself. I'm aware of SOV price, but I try not to look at it on a day-to-day basis. Overall, I think of it mostly as a distraction at this point. We would like to have all metrics be going up all the time, but the key thing here, from my perspective, and I think from others, and if anyone else wants to comment, that would be awesome, is to remain focused on building and not expect, not pay too much attention to the fluctuations that are occurring in effectively a very low liquidity market and on relatively low volumes. And also, I want to just respond to the last comment you made with regards to that. The platform is not locked down. What we have done is introduce a effective pause on zero. This is expected to be temporary, but lending can still continue. We introduced a fix now. This is something that the users brought up. There was an issue that yield revenue around a sovereign dollar lending was not being properly reflected. That is now being fixed. There's revenue to be made there. We want to direct more borrowing activity to the interest-paying borrowing, because that helps generate sovereign dollar demand via both the borrowing and the lending. And then, next week we'll be having the trading competition. The platform as a whole continues to operate. And we need Zero is part of an ecosystem here. And so what we're focusing on with things like the trading competition and the lending and improvements like the DApp and integrations is growing that ecosystem so that we can grow Zero and grow the economy that the sovereign dollar is part of. And so in that respect, SOV is always going to be either a lagging indicator or an advanced indicator. And it's primarily an indicator of sentiment. Unquestionably, there was, we knew this was going to be what I would call an unhappy SIP. It wasn't a SIP about progress. And we have to accept that. And I think one last thought I'll finish on. We're building here something new and experimental. And it's not unlike a regular startup in that we're going to try many things. And we're going to try 10 things, which I think of as experiments, right? 10 things that don't work for every one thing that does work. And it's the things that do work that matter. Ultimately, the only way to get to them is through experimentation. So it's like, the Edison line, innovation is 1% inspiration and 99% perspiration, and we are perspiring all over the place.
Thank you. And I agree. And I didn't mean to say it was locked down. I'm continue to interact with the platform, and there's still a lot of functionality there. I do think there's an opportunity I want to go back to something you mentioned in the video that you posted about SIP66, where you called out the idea that there was no toggle button to turn off lending. And so the increase in the origination fee was the only, the best way to discourage additional lines of credit. I don't know if you were aware that Uniswap turned off trading on Hex, the Hex token. And I think when all these opportunities to, call out the decentralized nature of the platform, the community, the vote, et cetera, are all beneficial. So just wanted to mention that. My last question is around the Curve token. What's going on with Curve and Michael, one of its founders, and if you have any comment and how that compares. I know there's a tremendous amount of differences between Curve and what we're trying to accomplish with Sovryn, but maybe you have a comment around that.
So I was actually invited onto CoinDesk TV to talk about that today. In the end, we ended up talking about WorldCoin instead, but I have quite a lot to say about that. Let me just give some quick context for those who are on the call and may not be aware. What's currently happening in DeFi is frankly terrifying. There is a major protocol. It's the biggest protocol in terms of trade volume, probably. I think many days it's larger than Uniswap. And it's called Curve. And it trades mostly stable coins. The Curve has a number of tokens, but by shorthand we can just call them the CRV token. And a huge amount of them are held by Mikhail Igorov. And what he did is he took out on Aave, Abracadabra, and Frax, as well as a number of other protocols, loans. And what he used as collateral were CRV tokens that he held. So he took out over $100 million in loans and added a huge amount of CRV token as collateral at the time. If the price of CRV were to reach 38 cents, and it's currently just above 50, then all of that CRV or in those positions as collateral would need to be sold because he would be underwater. And so it would all hit the market very quickly. And this would create a huge amount of bad debt across the DeFi ecosystem, introducing losses across all lenders. And protocols like Frax, Abracadabra, and Aave would also need to potentially sell their own tokens into this falling market in order to try and recapitalize, which would mean that one of the other largest, many of the other largest platforms would suffer as well, and then there would be a cascade because their tokens are being used by others as collateral. And so there would be this massive cascade, which could cause huge amounts of bad debt across the DeFi ecosystem. It's a real problem. And it is the type of problem that is known as systemic risk. Now, there are many types of systemic risk that we have in the crypto space. The other one that we've spoken about a lot is stablecoins, especially centralized stablecoins being used as the primary form of collateral in all of these protocols. And if USDC goes down or Tether gets attacked, then again, exactly the same thing would play out, and we would see a massively escalating, cascading losses. So I think this plays directly into what we're trying to build with sound finance in Sovryn. And the reason that we have governance in the first place, the purpose or a core purpose of Bitocracy is to protect the ecosystem, protect Sovryn, and protect Sovryn users from the introduction of systemic risk. So Bitocracy needs to govern how much exposure to any given asset there is. It needs to make sure that the assets that are used as collateral are not risky and that there isn't too much of them held in any given position. It needs to make sure that centralized stablecoins are not becoming a primary player or encourage the use of the sovereign dollar instead. And this is because Sovryn is built around a pristine form of collateral in the form of Bitcoin, which obviously is very volatile, but is deeply distributed, has deep markets, and most importantly, is unrelated to Sovryn. And so when we think about why governance needs to exist at all, why Bitocracy needs to exist at all, I would argue that one of its primary purposes for existence is to manage and govern systemic risk, as well as concentrated system-driven risks to particular players. And in the way this connects to SIP 66, actually, the SIP we just had, was that there was a particular class of user who was experiencing risk which I don't think anyone of us had properly understood, which was the potential risk for a cascading scenario of ever-increasing redemptions. And so I think here, again, the fact that Bitocracy was able to take a measure, and some people would argue we did it too late, some people would argue we did it too early. There's a whole bunch of argument about whether or not we took the right action, and I think that's fair. But what's important is that ultimately Bitocracy was available and was willing to act in order to provide a level of financial soundness and security to the ecosystem, both in terms of lines of credit and the sovereign dollar peg.
Hey, Englandia, thank you. And thank you, the team, for the presentation. That was great. So I wanted to tell you about an initiative that got started by Legosi, who proposed that the Spanish community selected two people to represent them. One who will act as someone that we will delegate the voting power, so that the community can discuss any potential SIP that comes along the way, and we can effectively vote as one block, so to get our voices heard more. And along the same lines, I was elected to become the spokesperson for the community. So I would like, in order to do this, to get all these slides for your presentation, so I can present to them and translate the content in Spanish. And I've been also been gathering some of the questions that people in the Spanish community have that they wanted me to ask you directly. So I have 3 questions, if that's okay with everyone. The first one is, after the implementation of SIP 66, which part of Sovryn should we focus on when we are creating content on social media, when we are trying to promote the platform? That's the first question.
That's a great question. And first of all, it's a great initiative, and I personally appreciate it very, very much. And I hope it would have a significant impact with the Spanish speakers. To answer your question, I think one of the most interesting aspects, the most lucrative aspects of Sovryn at the moment is staking. As you know, the staking dashboard is available in the wiki, and I'm not sure what the 6 months average is, but staking on Sovryn is something that yields Bitcoin, just yields RBTC right away. So I'm sure you know, Thomas, but just to give some background, you stake SOVs, and you start participating in the revenues of the platform. And other DeFi system, they do that as well. However, they pay out in the native token. Sovryn, since it runs on Rootstock, which is a Bitcoin sidechain, generates its revenues in Bitcoin. So the coin that Sovryn gives out to its stakers is Bitcoin, the most valuable currency there is. I don't need to preach to the choir, but just this significant difference between Sovryn and any other DeFi protocol that we give out in Bitcoin, and all the rest they give us in their native token, which basically inflates the value, or deflates the value of the token, because there are more and more of them coming out to the world because of the way protocols pay, is a big significance. It's a big differentiating point between Sovryn and anyone else in the world. That's my couple of cents on this.
I'd like to add to that for I think the next 3 or 4 months, what would make a lot of sense is to focus on the sovereign dollar above perhaps anything else. What makes it different, especially in light of the risks that we're now seeing to stablecoins again and again, the risks in Binance, the risks in Curve, the crash of USDC to 80 cents, the risks around banking, the regulatory environment, which is getting more and more difficult, and the fact that other types of stablecoins, especially centralized ones, can effectively go to zero at any time. And so everything is fine until it isn't. A second factor, and I think to use the sovereign dollar as a way of explaining the difference between centralized finance, YOLO DeFi, and sound finance built on Bitcoin, which is what Sovryn is building. And we've discussed that a lot actually today. The different type of governance that we've introduced and how it's effective, the avoidance of systemic risk, the use of the world's best collateral, the fact that we are built on Bitcoin and are continuing to increase the level of decentralization. I think all of that can be discussed and illustrated by this unique asset, which is the sovereign dollar, a different kind of decentralized but non-algorithmic stablecoin backed by Bitcoin, the only money you can truly own.
Thank you. That gives me a lot to bring back to the Spanish community, so That's great. The second question is aimed to John Light about once we zero reopens, if he thinks that it would be reasonable to see going back to a stage where we could have lines of credit open with, say, less than 200% collateral ratio. Like, is that something that we think is achievable?
The minimum collateral ratio required by the Zero Protocol is 110%. So users can open a line of credit as low as 100 as low as 110% collateral ratio. The reason why you see the lines of credit today with higher collateral ratios is because lines of credit with lower collateral ratios than that have been redeemed. And as other users see these redemptions happening, they increase their collateral ratio to try to reduce their risk of getting redeemed. So that has gradually pushed up the total collateral ratio as well as the lowest lines of credit collateral ratios over time. In order for the zero origination fee to be brought back down to a level where it makes economic sense again to open lines of credit, I think we should want to see more liquidity come into the system so that people can convert their sovereign dollars into other assets without it resulting in a depression of the sovereign dollar price and therefore creating an incentive for redemptions. And so the more liquidity comes into the system, the more demand there is for sovereign dollars, the less risk there is that there will be a redemption. And so if that happens, then the risk of redemptions goes down, and eventually I think Bitocracy can look at decreasing the origination fees again, and it'll be up to every individual user to decide whether they want to open a line of credit with a collateral ratio that's lower than 200-300% or not. I mean, that's their choice today, but users have kind of made a rational decision to increase their collateral ratios to try to decrease their risk of redemption. But if the overall risk of redemption has decreased because there's liquidity elsewhere, then they would have maybe more confidence in opening lines of credit or reducing their existing lines of credit to a collateral ratio that's more in like the 120 to 200% collateral ratio kind of range. But it's up to every individual owner of a line of credit to make that decision for themselves.
Right, thank you. That makes a lot of sense. Okay, so the last question is, after SIP 66 was passed, there has been an acknowledgement about lack of education regarding Zero. So the question is whether there is any plans of creating a series of posts or videos to explain Zero better once we're, I guess, ready to reopen it, so that people are more aware of how it works and all the risks and all that stuff. Yeah, I don't know. The question is whether this stuff is being thought of, being worked on.
I think there has been a lot of that kind of education over the last weeks and months, and Yes, that will be reflected in communications going forward.
All right. Well, those are the first questions that we've gathered, but ideally in all the future community calls, if we can have just a minute at the end, I can keep bringing these questions and then I can bring the answers back to the Spanish channel.
Here, here.